The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, time for our live look at Bitcoin. The CoinDesk Bitcoin price XPX index is trading at $44,643. Bitcoin is down about 1.4% over the past 24 hours, and the CoinDesk Ether price ETX index is right now it's above $3,000, but ETH is still down roughly 1% for the day, and the new DFX CoinDesk's DeFi index is trading at $643. DeFi slightly down about 0.6%. And joining us now to discuss the crypto markets and more is Ryan Selkis, CEO of data analytics firm Messari. Hey there, Ryan. Good to have you on. So, taking a look at the crypto markets, it's slightly down, taking a bit of a breather today, but would love to hear your markets outlook.
I tend not to look too much at the day-to-day swings in the market. I think directionally this year has been extremely positive. We had the dip in Q2 that was largely driven by some of the chaos in China, by Elon Musk's tweets, by the ESG narrative really picking up full steam in a negative way when it comes to proof of work mining. And I think since then, the rebound has been largely attributed to de-risking many of those issues. A lot of the action last week, I think is going to be tied somewhat to the activity going on in DC and the infrastructure bill. But in terms of day-to-day, this is a very volatile asset class. So up or down by single digits is par for the course.
Do you have a price prediction for the end of the year?
I'm a perma-bull. You all know that.
So, Ryan, we saw some big movements around centralized exchanges like Binance, and overnight, for instance, a lot of Tether has left Binance, and we also saw a lot of Tether go into places like FTX, particularly. What do you think is going on here? What's happening with flows right now in the market? Is there something? This is outside the U.S., of course. This is in Asia, and there's a lot of regulatory pressures. What do you suppose is happening?
Well, with Tether in particular, and the stablecoin environment in particular, I think that's something that we're keeping a close eye on, and think there's a lot of layers to the story of what's happening in the stablecoin markets. In general, with stablecoins, we've seen an unrelenting march upward in terms of market cap liquidity, dollar deposits that are locked in USDC in the various stablecoins that are powered by Paxos, custody by Paxos, obviously Tether. And I think one of the biggest misconceptions in the market right now, at least the institutional market, is whether Tether is properly backed. And I'm not going to necessarily weigh in on that argument one way or the other, because no one is going to trust the audits that come out of Tether, no matter how much evidence is presented. And frankly, no auditor will likely wade into those waters because the risk outweighs the reward in getting involved. I think at a high level, though, the inflows, more often than not, if you talk to trading desks and other firms that are in the know, are legitimate. Tether is liquid, and ultimately the reason that we have this opacity in the market is due to unclear regulatory requirements. And the fear in the market that if some of these stable coins are fully regulated and over-regulated, then what's going to happen is you won't actually have a crypto asset. You'll have basically the equivalent of a central bank digital currency, which is subject to surveillance and censorship. And so I think Tether, for better and for worse, has become the Wild West stablecoin option that is a necessary component, at least today, of markets infrastructure. That impact might wane over time as we see other well-regulated options, as we see more institutional investors rely on those regulated options for their trading pairs. But today, I think that Tether flows are real, and they'll continue to be real, even if some market skeptics might disagree or be concerned about the viability of their reserves.
So, what can they do to allay those kind of concerns? Obviously, they had issues in the past. They had cases against them in court, and they've admitted that they might not have been entirely one-to-one back. Of course, that's when that all started. So, what could they do now that would allay fears or concerns in the market that they don't have those assets?
Honestly, I'm not sure. I think if you look at the complaints historically, it seems that any shortfalls that they did have were very likely temporary due to seizures in international accounts or transfers in international accounts that were going to be adjudicated in whichever jurisdiction you're talking about. I'm not a Tether insider. I'm not affiliated in any way with Tether or Bitfinex, so my speculation is as good as the next person's. But from an optics standpoint, I honestly don't know what Tether and Bitfinex or any affiliates of Tether could do to satisfy some of their critics. And I think that's going to be something that will only be de-risked over time by the proliferation of other regulated stablecoins that are under U.S. and regulatory oversight, but they come with trade-offs, like I said. So if we get into an environment where all of the stablecoin transfers are essentially permissioned because they're surveilled and transactions can either be rolled back or censored outright, you will still have alternatives that are permissionless and free to move without encumbrances from the regulated, centralized entities that are facilitating the transfers. So it's one of those things that we wait and see. It's a known unknown. And I think in the meantime, I at least don't lose sleep over it, but it's one of the known unknown risks that are in the market today.
Ryan, you've been very vocal on your opposition to the crypto tax provision of the infrastructure bill, and you've sort of suggested that the crypto industry or crypto advocates should take a more confrontational approach with the government and with regulators. Why are you advocating that, and what exactly is the plan?
Well, I should be very clear that I'm not advocating against the crypto tax provision. I don't think anyone that was battling in DC was advocating against folks in the American crypto ecosystem actually paying their taxes properly and on time. The argument was about the definition of a broker and the technical feasibility of individuals or staking services or other validators in these decentralized networks actually having the ability to surveil their customers, issue 1099s, and serve the same function as actual regulated brokers. No one that I know of is arguing that Coinbase and Gemini and Kraken and the other regulated money transmitters that are already regulated on a state-by-state and federal basis, that they should be cooperating and part of the solution for tax reporting. And in fact, that'll be a convenience for most of their customers to have clarity on that point. Much like you would if you're a retail investor leveraging Schwab or E-Trade or any other brokerage. So that's not really what's at issue here. I think what's at issue is that we had a bipartisan approach to amending the technically infeasible language. It was blocked by a lone senator who objected not on the merits of the provision itself or the reconciled amendment itself, but because he didn't get his pet project also included at the last minute in this amendment process. And so now we had an instance of an 87-year-old child flipping over the chessboard at the end of the game because he didn't get his way. And that's American politics in a nutshell. What I've been advocating for, and what I think many people agree with, is that crypto is now large enough and it has enough grassroots support that that type of behavior and ignorance is no longer acceptable. So I'm not advocating for a burn all bridges, damn the torpedoes, storming of every single political representative. But what I do think we need to do is I think we need to be proactive about scoring candidates and elected representatives on their crypto policy. And the ones should be aggressively primaried and removed from office by as many means necessary as we can throw at them through the electoral process. The fives, which would be our supporters, should be backed in their races. And then the 2 through 4s, we just need to have a concerted education campaign.
Ryan, along those lines, this tweet really caught our attention. Yellen, the Treasury Secretary of the United States, is a white-collar criminal and grifter. We need to destroy crypto's enemies before they destroy us. Not hyperbole. I hope people are ready to mobilize beyond 1 week. And to give this tweet a bit of context, this is in response to a list of speaking fees paid to Treasury Secretary Janet Yellen from various banks, financial institutions, and think tanks. But this is a very aggressive tweet, and I was hoping you could explain.
Well, I'll leave that up to people that read the tweet and their interpretation of whether you think that a former Fed Reserve chairman, who's very well politically connected and was likely going to be on the short list of some major chair for whoever the Democratic nominee was, whether it was appropriate and expected that she would make $7.2 million for conducting a series of Zoom calls with other financial services companies in 2020. And I think any reasonable person would look at that and balk at the fees. They would balk at what is clearly conflicts in interest in terms of basically being at the behest of the Wall Street banks and backers that have paid her handsomely over the course of the last couple of years. And really, it's everything that's wrong with American politics. Is it blatantly illegal? No, but that's a function of our broken political system. And I think right now, the folks in the crypto industry, whether you're talking about regulated entities, whether you're talking about investors or just kind of retail participants in these ecosystems, they're fed up with that, like most of America is, because both parties are extremely dysfunctional. If you look at Congress's approval rating, it's routinely in the teens. And at the end of the day, this is the type of behavior that is frequently rewarded in DC and that everybody despises. So
Brian,
I think
just to play devil's advocate here, you know, Messari has just closed a $21 million Series A round of funding led by a hedge fund billionaire, Stephen Cohen, at Point 72 Ventures. Do you feel there's a conflict there?
I don't see what the similarity is. I'm not holding elected office right now, nor am I holding office in any regulator that is responsible for courting financial activity in the U.S. So I think by extension, any privately funded company that has outside investors would have to basically hold the position of their outside investors. So I think I want to separate a couple things here. One is what is generally a bipartisan and very popular concerted effort by the crypto community to fix some of these issues, which are largely the product of ignorance in DC, not malfeasance or outright hostility, at least for now. And my personal political views and what I want to do to support that bipartisan effort, and then what Messari as a company does, which is provide information and data about the universe of crypto assets. So we are indirectly impacted by the provisions in DC, because if things go through as written and you take the most aggressive interpretation of what was written and passed, and that is ultimately implemented through rules over the course of the next 18 months, then ignorant politicians and regulators in DC are going to intentionally cripple the highest growth sector of American tech, which is crypto. They're going to essentially arm China from a geopolitical perspective. DCEP and their currency will have an outsized advantage over the digital dollar initiatives, which really should be running on crypto infrastructure. And at the end of the day, I think it's going to be counterproductive to their security concerns in terms of how do you actually run and monitor the potential systemic risks and national security risks of cryptocurrencies. The more of this is properly regulated and kept in the US and run by US entrepreneurs and participated in with US crypto investors at the retail level, at the fund level, and everywhere in between, the stronger we're going to be for it. And this is not even up for debate. There was one lone senator that objected to this provision, not even on the basis of the merits, but again, because he was having a temper tantrum. So that's where we are today. And I think this is going to be a winning issue to get on the right side of.